All right, so in this video, I'm going to be doing a trade recap from May 20th and how I took 3 trades on Tesla and I just could not get a lot going that day. And the reason why I want to highlight this is because the market is different every single day. So at least from a scalping perspective, very short term, which is what I am, there's going to be a lot of days in between each month where it's just not very exciting. And I'm always trying to do a better job at accepting that and just dealing with it. I think also a lot of new traders, they kind of get caught up in this too, where they take the approach of making X per day. And a lot of times that's the downfall. It definitely was for me in the beginning. And then after a while with experience, just realizing that each day is very different. Some days are going to be boring and the price action just isn't great. And that's where I try to do my best to not get too beat up. And then the handful of days where things really start to speed up and get very aggressive and there's a lot of opportunity, that's where I try to take full advantage. And a lot of times that's where my monthly P&L comes from. So I think this is going to be a great example of one of those days that's just not that exciting and how I went about navigating it. Like always, I'm going to get into the technicals of SPY, the Qs, and Tesla, and then get into the trades. So starting with SPY. And as you can see, just looking at this daily chart, it's not that clean. There's been a few dips. They have been bought up. It has been holding this 50 SMA, so it is clear support. And on the 20th, main levels that I was looking at for SPY, just to get an overall gauge of the market. I'm not actually trading SPY. I just want to see if it can take out prior day's high, then that shows that at least for the short term, there's some buyers that step in. And if it takes out the prior day's low, then there's some weakness. So those levels that I was looking at was the 411.05, which was the prior high, and then prior day's low, which was 405.33. But realizing that that prior candle was pretty nice. Whether or not it led to something more, I have no idea. But that 50 SMA clearly held, which was a good sign. And now getting into the Qs, so that prior day, it looked like there was the possibility of 316 dropping. And if it did, I mentioned it felt like there was going to be some downside room. It did not. Buyers stepped in. Very nice candle that prior day. So the main levels that I was looking at was prior day's high, 322.90. If it gets above that, then maybe there's some short-term strength, but also knowing that a lot of the short-term moving averages are above. So there's going to be a lot of resistance above. And if for some reason there's some weakness in the market and it takes out that low, 316.30, then it definitely felt like there was some downside room. Okay, now getting into Tesla. So the daily has been pretty beat up. Some green candles, so felt like there were some buyers that were trying to step in, and it was extended from the 9 EMA. So I have noticed that not only on the intraday, but also on the daily charts, whether it be extended to the upside or extended to the downside, a lot of times stocks can move back to the 9 EMA before they continue in the direction, or if they reclaim it to the upside or they take it out to the downside, that a lot of times can be a start to a trend change. So just seeing that there was some space between that prior candle high and the 9 EMA, I thought maybe there was some sort of bounce there. I tried not to be too biased, but just knowing that that was a possibility. So focusing on the levels like I always do, prior day's high, 566.21, gapping well above that. So the next level above was pre-market high, 575.60. And if for some reason things started to roll over, pre-market low, 559.90, and prior day's low, which was really far away. I didn't think it was going to get there, but you never know. So I mark it just in case. And that was at 546.98. Okay, now to get into the trades. So before I get into the first one, just want to talk about sizing. I know that sometimes I will flip between trading a little bigger and a little smaller, and a lot of that comes from experience. I watch Tesla a lot. I can get a feel for how it's trading off the open, and today was a good example of just look at this price action. There is a lot going on. It is pretty whippy. It's not very clean. So I already knew in the back of my mind that I don't feel the need to have to push it, so I'm not going to size up. So I just stick with my standard size of 5. And something else to notice is that it's 26 minutes into the day and I have yet to take a trade. So that also lets me know that I need to be careful. When things set up very clean, especially on Tesla, a lot of times there can be some sort of clean flag pattern, usually within the first 20 minutes. And when it's chopping around and nothing is that clean, that is a clear sign for me to take it easy, do not put my foot on the gas, trade regular size, and as the day goes on, trade even smaller. So here's where I see the first setup. It wasn't necessarily the most clean, but trading 5 contracts and being almost 30 minutes into the day, I felt like there was a good possibility that now it could finally choose a direction. So I marked the high, 578.19, and I also have the low marked, 571.07. It finally feels like buyers have stepped in and it's about to take out the high. So I end up going long 5 call contracts. I had the 580, so just the next strike right out of the money. Being that there was 25 minutes of consolidation, I felt all right about the setup. And then right there, it pushed above the high. It started to show some weakness. Knowing that I did chase a little bit, I ended up getting out very quick just in case if for some reason this had a nasty pullback, and I got out of that trade flat. So I was only in that trade for 22 seconds, but like I try my best to do, I want to see it go pretty quick, otherwise just bail on it. So here's where I think I could have done better. This is a trade that I did not take that I think I should have. So it cleared high of day. Yes, it pulled back a little bit, but it still held above it. Now that's a very quick flag pattern and just above high day. So it feels like Tesla finally chose a direction. How far it goes after the fact, I have absolutely no idea. But taking that quick flag, I think was a decent setup. Even if I only went to 3 contracts, still being involved in the move. And right there, that's a nice move. Quick push, and then obviously as it starts to speed up, you know me, I take quick profits. So that was a good setup, and unfortunately I didn't take it. My gut just told me to wait a little bit longer, and sometimes that means missing a trade. And that happens. It's hard to be perfect. I let a lot of stuff go sometimes. The only thing that I do after the fact is try to make sure to wait for another clean pattern and then give it a chance. I don't want to get FOMO and I don't want to start going crazy, which I have been guilty of doing before. So I just accept the fact that I missed the trade and then I patiently wait to see if it has another setup. And this is where I take the second trade. So right now I have the 585 calls loaded. So that next strike out of the money. And now you can see the line on my chart. It's looking like a nice flag pattern. The high is 581.93. It ended up taking that out. I got long. I sized down. I only took 3 contracts. I got filled at 795. Got the quick pop. And then here's once again, I want to see it go quick or I'm going to get out just to be safe. Get a nice move. Feel pretty good about it, and then it starts to show some weakness. And the moment it gets back below 582, just to be safe, I end up getting out of that trade for flat. So as you can see, I'm taking the chances. I'm taking the setups. Of course, I want them to work, but if they're not going to go that quick, I make sure to try to just get out flat, because if my worst trade is a flat trade, then overall, that's not a bad day. And here's where I take the third and final trade. So it did pull back after that second trade. It's still holding the 9 EMA. It's above the VWAP. It did take out high of day. And this is starting to look like another flag. It's not as clean. It's hard to find perfect patterns in the market, but just knowing that is somewhat of a flag pattern. So I end up getting long 3 call contracts, sizing down the 585 calls. Once again, I end up taking the 582 break, anticipating the high of day at 582.50. I get filled at 774, and then like always, I want to see it start to speed up, and then when it does, that's going to be the time that I need to start taking profits. And it kind of hangs here for a few seconds, but right there, ends up breaking. Now it's starting to really speed up, skipped 50, 60 cents. Now I'm in the driver's seat. I'm clearly up on these contracts. I do not want to let them go red. Get a nice quick move through 583, and then right here, started to show some weakness into that whole number. Starts to pull back, and just to be safe, I end up getting out, and I actually made a little bit of profit on that trade. So it was definitely frustrating. It was not exciting, but that's just how it goes. It's hard to have price action be amazing every single day. So I ended up flat. I made $40 on the 585 calls, and I lost $7 on the 580 calls to be up $32 on the day. And even though this is not exciting, and that is not a number that I really care much about, I feel like overall I managed the risk all right, because these are sometimes the days where I can get really chopped up and it leads to big red. So I'm glad that I was able to control the emotions, not overtrade, and 3 trades in, being very tiny green, close to that hour mark, I knew it was time for me to just call it a day. So that was the trade recap of my Tesla trades. Thanks for watching the video, and I'll see you in the next one.